Good afternoon, everybody. My name is Julian Cork. As I said, I'm a board member and the COO of Landbay Partners. Today, I really want to talk on the theme of wake up your money, and specifically about alternative and marketplace lending in the UK. I'll talk a little bit about what it is, some oversights on the environment in marketplace lending today, and then talk about some of the tools required to be successful in that space and a view to where things are going in that business in the future. So first of all, I want to start off with what is marketplace lending? So marketplace lending is all about the idea that you don't need a bank to lend money. You just need a marketplace. And on one side of the marketplace, you have people with funds to invest, and on the other side of the marketplace, you have people who wish to borrow money. And in the same way as Amazon, eBay, etc., manage the end-to-end process for purchase and sale of goods, the peer-to-peer marketplaces bring together investors to become lenders on platforms and link everything together through a frictionless online marketplace. Now, the marketplace itself performs a whole bunch of very important functions here to facilitate that. It provides the legal constructs to make it work, the payments, the origination of the underlying debt, the underwriting, and of course the technology interfaces and servicing capabilities. And for doing that, it then charges a platform fee. Now, there are several different models of marketplace lending live today. In some models, individual investors choose loans. In other models, such as Landbay, investors are diversified automatically by platforms across a multitude of different loans. But in all models, the underlying investors are contractually linked to the underlying loans, and they receive the interest minus the platform fee. And that means they have full credit exposure to those loans, and the platforms actually manage all the processes behind that. Now, peer-to-peer lending started in the UK in 2005 with a company called Zopa, which focused on consumer lending, and has subsequently diversified into SME lending and also property lending. Now, property lending is currently the largest asset class in this space and is actually the fastest growing area within marketplace lending. And at Landbay, we really believe that the additional security that comes from having a first charge mortgage on top of the underlying asset and giving the physical security there really makes weighted returns a compelling investment. Now, that's why we've seen such a lot of growth. And with a lot of growth, you need controls. And within the UK, the whole market is regulated by the Financial Conduct Authority. And also there is an industry body, which is called the Peer-to-Peer Finance Association, which equates to the top 9 platforms that have about 80% of the volume today. So at Landbay, we're in the business of applying marketplace technology to the UK mortgage market. And we focus on the prime specialist buy-to-let market. And that is buy-to-let properties which are for portfolio landlords or for houses of multiple occupancy or which are held within special purpose vehicles. And this segment of the £36 billion UK annual lending market in buy-to-let is growing very quickly at about 24% each year. Our marketplace model enables Landbay to provide competitive funding for those people wishing to take out mortgages in buy-to-let and also reliable returns for institutional investors on the platform. Now, to date, we've lent over £200 million and have had 0 defaults, and that's primarily due to the credit quality of the underlying assets, and that's a very important thing for all peer-to-peer platforms. And this UK specialist mortgages are critical in that space. These mortgages are supported by the rental income that comes in from the letting of those mortgages. And you can see on the left-hand side here that the income from those mortgages, from the rents, has actually tracked the consumer price index in the UK consistently for many years. And you don't see a blip, for example, for the credit crisis. The other thing that's interesting about the UK mortgages is they're in the buy-to-let space is they're counter-cyclical. So you can see on the right-hand side the recovery rates through the peak arrears that you saw through the financial crisis, and the dark blue line is buy-to-let mortgages, which actually, because of the cash flows coming in from the rents, we're able to recover a lot more quickly. Now, Landbay is unique as a mortgage place market lender because we have multiple different funding lines. So on one side, we have retail flows, and these are direct-to-consumer online capabilities that let individuals invest in our classic accounts and our tax-free accounts on our platform. And we have many lenders on the platform, but they lend, say, on average about £15,000. But the thing that's really enabled us to scale significantly is our institutional funding. So funds and banks place many millions of pounds onto the platform, and we're able to originate to help them provide securitizations and build their own individual balance sheets as a marketplace lender. And in fact, Landbay was the first company to facilitate a AAA-rated securitization for marketplace originated debt. The key thing about this funding base is that it gives us a lot of security, and that strategy of having both the retail and the institutional investors means that we can de-risk Landbay as a lender. The diversified funding base means that we have a lower cost of funds, so we can actually lend out at more efficient levels, but also that we can manage greater stability through different funding cycles as banks' appetite for mortgages waxes and wanes, or the securitization markets across the globe change. Now, regardless of the funding strategy, the way Landbay makes money is consistent. We're really focused on annuity income. So that means the platform fees and the service charges, and they're charged on performing loans. And what that means is that our interests are then totally aligned with our investors. So we have skin in the game and are really reliant on quality origination to be able to get paid. Now, quick look at the environment within the UK peer-to-peer world. We're direct to consumer, so that means we need a lot of simplicity, performance, reliability. It's a heavily regulated business, so it's FCA regulates it under a specific loan type called a 36H construct, and we have multiple partnerships and integration points. There's a lot of financial and legal complexity there, and it's a very fast-growing market. So to be successful in the market, you need to be able to be very agile, and technology development speed is vital to stay ahead. So I want to look quickly at outside of Landbay for our lenders and borrowers, and then look at what's beneath the covers within Landbay so you can understand what our business is. So from a retail perspective, we've focused on a simple, intuitive interface. We've got lots of things that you would expect that focus on end-to-end user journeys, retail-like checkout flows. But because it's a long-term investment strategy, you have quite low engagement with the individual users. So a lot of stuff you do needs to make sure it's automated and very simple. From a lender perspective, we do a lot with our borrowers to originate mortgages and make sure we're getting the data to the right people at the right times. Now, looking into the underlying Landbay, we've got a fully microservices based in the cloud architecture, and we've got a core platform called Shard. And in fact, our Shard platform was noted as a case study for Amazon Web Services. And that means we got all the stuff you would expect, a reliable, scalable, and secure platform. And we feed our mortgages from the left to the right here across our mortgage origination to our servicing capability, cash flows, feedback, and all our mortgage analytics enables us to evolve our products very quickly. Now, we focus all our core operational team on the building of that, and our technology is all focused on that. But obviously, to run a business, you need to do an awful lot more. So a lot of the stuff that we use outside of that, from workplace technology to HR, from marketing tools to infrastructure, is all as a service. And pretty much every aspect outside of our core platform is there. So I need to get back. OK, so quickly looking at where the future goes within marketplace lending, I think these two pictures really sum it up. On the left, we've got the expected growth of UK marketplace lending, and on the right, we have the the growth forecast for the UK buy-to-let market. Hopefully, it will stay like that. So peer-to-peer is really set for continued exponential growth, and that's really driven by three main factors. The first factor is the increasing normalization of peer-to-peer. So a lot in the UK, about 600,000 people have invested in peer-to-peer, and that's really not even halfway through the early innovator cycle within the UK. These early adopters, when they change into getting to the early adopter stage, we're going to see significant growth there. The second piece is more institutional money being invested through through marketplace lending, and the US is really driving the way there, but the UK is really a fast follower. And the third thing that's really driving growth within UK marketplace lending is the innovative finance ISA. That's the ability for individuals to invest on a tax-free basis. So we're at the early phase of the adopter phase for adoption of these businesses. But also, when you look at the property side of things, we're focused on the UK buy-to-let market. Today, that's about 236 billion of outstanding debt. And within that, the specialist piece, the smaller circle, is about 25 billion outstanding debt. Now, because we're focused on that specialist piece, we see that within the next 5 years, the overall market's going to grow at about 3%, but the specialist market is really growing at 24%. So it's got a long way to go. And that growth's meant that we've seen Landbay grow significantly over the past 4 years. So I hope I've given you a little bit of an overview about UK marketplace lending and some of the tools we use, and what the sector is scheduled for, which I see as being exponential growth going forward. Thank you.